For many, homeownership is the American dream, but somewhere along the way, something changed. Homeownership has been way less accessible to millennials and Gen Z than it was to their parents, in part because of dwindling housing supply. But even within that generational disparity, 2023 was a uniquely bad year to try to become a new homeowner. Now, we're going to get to the bottom of this homeownership crisis in the US, how bad it is, and why. Median home prices, the homeowner vacancy rate, and mortgage rates. We're going to go through all of them. Then again, affordability depends on three big numbers: family income, the price of the house, and of course the mortgage rate. Now, what needs to change in order to make housing affordable again? That's what we're going to at least try to answer in this video. And just in time too, as experts warn that we could be entering the greatest real estate correction in our lifetime. Check this out.
Well, real estate struggles are real. Home buyers and sellers alike feeling a massive struggle to close deals or make money. And if you need yet another sign of turmoil, 45% of U.S. real estate agents are struggling to pay rent on their offices. Here to react is private equity fund manager and real estate investor Grant Cardone. Welcome, Grant. So tell me, why are real estate owners and agents not able to pay the rent? What is going on?
Well, because, Rachel, the Fed single-handedly has killed the housing market. The Fed will make more renters in this country in the next 2 years than it has in the last 50, because mortgage applications are at all-time lows. Mortgages are double what rent is today. And it doesn't surprise me that real estate agents are feeling the brunt of this. Back in June of 22, Jerome Powell said that the middle class, everyday people, would disproportionately feel the pain of higher interest rates in his attempt to control inflation. He has not controlled inflation. He has failed miserably. What he has actually done is create it, and in the meantime, stop the housing industry.
Like my friends and I always joke about, possibly the worst financial mistake of our life was not buying a house when we were 18 in 2008. But seriously, guys, when the housing market and its lack of supply and housing prices, we may as well be living in 2008, because it definitely feels like deja vu right now. So why exactly is it so hard to buy a house right now? It's tough to buy a home these days because there aren't enough houses for sale and prices are going up. Most people with homes already have low mortgages, so they don't want to sell. While new homes are selling more in 2023, they still make up only a small part of all home sales. Affordability is also a problem because mortgage rates just keep going up. The 30-year fixed rate mortgage is around 7.30% right now, making monthly payments about 50% higher for the average homeowner compared to January of 2022. It's getting more expensive to buy a home, plain and simple. Also, there's not a lot of homes available right now. It's hard for the independent home builders to build the vast majority of new homes to get the money that they need, because not many lenders focus on that. Regional banks traditionally contribute more than 70% of financing, and today, some estimates hold that nearly half of those banks are insolvent owing to the most recent banking crisis. And on top of all of that, big investors like BlackRock buying homes to rent out makes it even harder to find homes for sale. Yep, definitely need to talk about big old hedge funds like BlackRock buying a large percentage of single-family homes as investments. Some they put up for rent, which gives them control over rental prices. So young people were told to invest in other things and told that you don't really need to own your home. Kind of sad if you think about it. I mean, most people, sure, they appreciate the investment that is their home, but honestly, I think more people just want a home so that they can have somewhere to live with some peace of mind knowing that it's theirs, you know? More to come in this video, including what needs to change for housing to become affordable again and what potential home buyers could do now to overcome the challenges. But first, just a quick thanks for always watching these videos. You really make my day with those likes. They mean the world to me. Don't forget to subscribe and tap that notification bell. That way you won't miss out on future financial information and analysis content like this one. All right, so let's get back into it. Now, the question I always get when it comes to real estate: is it time to buy a home, or is it better to wait on the sidelines in hopes that either prices or interest rates see a significant drop soon? And what if there's a recession? To help you overcome these challenges, let's talk about the factors to consider to figure out your next home buying move. So, mortgage rates are still a bit high. Even though they have come down just a little bit from the crazy 8% in October, they're still well above 7%. Home prices are also on the upswing. They've now increased for 7 straight months according to the Case-Shiller U.S. National Home Price NSA Index. It may make you hesitate to jump into buying a home right now, and that makes sense. But here's the deal. Buying now means you can start building equity right now as well. Plus, you dodge the risk of future mortgage rate hikes. Those higher rates can mess with your monthly budget and have you shelling out more interest over the life of your loan. And if you think about it, there's a reason they always say you marry the house and you date the rate. Translation: theoretically, you can always refinance refinance later. How much later you need to wait, that's another story though. Now, experts recommend as a general rule that if you can say yes to these 3 questions, it might be a good time to buy. Do you have excellent credit? Anytime you're borrowing money, start by checking your credit score. Have you saved enough money for a down payment? In addition to paying your bills on time, you should be sitting on a sizable chunk of change for a down payment. Are you planning to stay in the home for a while? Beyond the purchase price, buying a home comes with closing costs that can run thousands of dollars more. So to justify those one-time transaction costs, it's wise to be reasonably certain that you won't move anytime soon, or that you'll be financially stable enough to hold on to the property and just rent it out. Now, of course, the decision to buy a home is ultimately yours. Life doesn't wait for the perfect timing. If you're itching to become a homeowner, meet the criteria above, and you're financially solid, you can definitely get started on house hunting for that dream home. Now, the recession talk. A survey says there's a 46% chance of a recession by September of 2024. But if you think about it, recessions make buying a home a little bit risky. Lose your job and a loan approval might be a struggle. Even if you're secure, a hard-hit local area could mess with the real estate market, and fewer buyers means fewer home selling, potentially limiting your choices. Plus, money being worth less and houses more and more is basically a wealth transfer from those who bought houses long ago and who works for money right now. Imagine how that situation could get worse in the future if you choose to just wait it out. So yeah, there are challenges to waiting too long as well. If you're in a relatively solid financial situation, then you can review your finances in detail and think about how much you're able to pay up front as a down payment. Be sure to take the pulse of the town in which you're hoping to live. Then talk to an experienced local real estate agent to figure out whether you should buy now or wait until the market is a little bit more friendly to your bank account. As for the big picture, what needs to change to make housing affordable again? You see, there's 3 big numbers to consider: family income, the price of the house, and the mortgage rate. Incomes are rising somewhat. They've been rising since 2019, so the bigger issue is interest rates. When they were low, they papered over a surge in housing prices that began in late 2020, helped by people relocating to areas like Florida, Austin, Texas, and Boise, Idaho to work on their old cities from their new homes. Now, interest rates are skyrocketing, making it harder and harder for home buyers to afford homes, even though incomes are on the upswing. Meanwhile, housing prices are holding on to the biggest gains that they've scored during the whole COVID situation. At the current 8% mortgage rate, mortgage payments are 38% of median income. The mortgage rate has to fall to 5.5%, or the median price home has to fall by 22%, or the median income has to increase by 28%, or some combination of all 3 variables. At the same time, demand for adjustable rate mortgages has spiked to its highest level in a year amid the broader slowdown in mortgage applications. So, family income, the price of a home, and the mortgage rate. All 3 indicators are facing a rough journey back to what we used to call normal. And let me tell you, normal feels like a distant memory at this point. Let's break down the numbers to see how far off track we are. The National Association of Realtors uses the Housing Affordability Index, the HAI, a metric that's been around for 34 years to measure affordability. It figures out how much money the average family needs to afford the typical home, which currently is at a whopping $413,000. If the index hits 100, it means the average family can buy a home with a 20% down payment, assuming that they're willing to put 25% of their income toward principal and interest. Now, the long-term average of the HAI is 138.1, giving the average family a 38% buffer. The highest it's ever reached was 213 in 2013 after the whole housing market crash and financial crisis mess. Guess where it stands now? A not so impressive 88.7. Now, let's throw in some scenarios using the NAR data to paint a picture of how far off we are from the good old days between 1989 and 2019, and what it would take to bring things back to a more typical setting, with the national average for the 30-year rate dropping to 7.98% when these calculations were done. If home prices are stable, rates need to fall to 3.55% in order to be back to historical averages. If prices grow 5%, rates need to fall to 3.16%. If prices stay the same but incomes increase 5%, rates need to fall to 3.95%. A mortgage rate that stays around 8% means median home prices need to fall by 35% to $265,000. If rates stay at 8% and prices at current levels, income needs to increase by 63%. 63%, guys. And just to compare, average interest rates from 3% in 2021 to as high as 8% just recently. That's a 167% jump, driving a $1,199 increase in monthly payments on a newly bought house. So I think you guys are getting the picture at this point. A lot has to happen to make housing affordable again in the US. To get affordability back to a comfortable range will take a combination of higher wages, lower interest rates, and stable prices, and that combination may take until 2026 or later to come together. Until conditions normalize or improve, the real estate game will be ruled by a select few. Cash buyers in particular will have a bigger advantage than usual. If you're up for relocating to the Midwest, you could get the best deals in cities like Louisville, Indianapolis, and Chicago. Even small drops in rates could bring affordability in line with the long-term national average there. But for the rest of the country, brace yourself for a little bit of struggle. Don't hold your breath for mortgage rates to hit 3% again. You may end up turning blue. We'll be counting ourselves lucky if they inch back to 5%. Tough times in the housing scene, my friends. Tough times. But hey, at least we have one another. One financial freedom fam getting through this together. Leave a comment down below. Let us know what you think about the U.S. housing situation right now. Will housing improve for 2024? Drop your thoughts down below and we can pick this up again in another video. I'm already hard at work working on the next one actually, so I'll see you guys on the next one.